2024 is not so far from us. What are your plans? Do you have all it takes to amass huge returns next year? In this dynamic world of cryptocurrency where fortunes can be made or lost overnight, investors are eagerly anticipating the crypto bull market. Well, it's countdown season. The spotlight has always been on Bitcoin, the leading cryptocurrency that drives almost half of the total crypto market capitalization. But as it currently hovers around the $26,000 mark, some downside risk is expected. On the other side, the pullback could pave the path for a dramatic surge, with predictions indicating that Bitcoin could reach a whopping $120,000 per coin in the next Bitcoin halving. The 2024 Bitcoin halving is looming and has effectively captured the attention of Bitcoin enthusiasts and global investors. The next one is scheduled to occur sometime in April of 2024, when the block rewards reduce by 50% from the current 6.25 Bitcoin to 3.125 per block. All eyes are on this event in particular. The halving event, which happens approximately every 4 years, represents an important moment in the life cycle of Bitcoin. Now, it is a season of anticipation, speculation, and profound economic implications. Bitcoin halving reduces rewards for miners and could impact Bitcoin mining profitability, thereby forcing Bitcoin miners to adapt and become more efficient. According to historical data, Bitcoin mining could significantly impact the Bitcoin price. While the halving is generally bullish for Bitcoin, it can usher in short-term price volatility. As the world's largest cryptocurrency in terms of popularity and market capitalization, this milestone can also influence the wider cryptocurrency market. Every Bitcoin block comprises new transactions that have occurred within the Bitcoin's network. Miners commit these transactions to the blockchain and are granted a certain amount of Bitcoin in exchange for their services. The vast number of globally distributed Bitcoin miners prevent a 51% attack on Bitcoin's blockchain by maintaining a decentralized network where no single miner or group of miners controls more than 50% of the total mining power, thus making it difficult and costly to manipulate the blockchain. In addition, Bitcoin halving works automatically, with the code executing an update every 210,000 blocks, cutting down the mining rewards given to miners for adding a block to the blockchain. However, the fate of Bitcoin climbing to new highs as a result of this halving depend on a couple of factors, especially the Federal Reserve. A crypto analyst named Austin once provided valuable insight on the developments in the market and the potential scenarios for Bitcoin and Ethereum. Somehow, the Federal Reserve FOMC meeting seems to be the holder of the key to unlocking market direction. For nearly 2 years now, the prospect of higher interest rates have been affecting markets, but the direction of rates may soon hit a turning point. After 10 straight meetings where it raised interest rates, the Fed took a breather at its June meeting. For a while, there was breathing space, but then it was hiked again at its July meeting. With the Fed holding steady at its September 19th through 20th meeting, few analysts doubt that the end of rising rates is near, as inflation comes increasingly under control. Are these issues potent enough to disrupt the crypto market bull run? Higher rates have been playing out on stocks, cryptocurrencies, and commodities such as oil over the last 18 months and more. How long will the rate environment impact markets, and where do we go from here? While the Fed has already raised rates 11 times during this tightening cycle, it's easy to spot when markets set up and took notice that the central bank was not kidding when it was about to recalibrate monetary policy. It was November 2021 when cryptocurrency and many of the riskiest stocks peaked. Steve Azuri, head of Azuri Financial in Troy, Michigan, said the stock market will not worry about the future interest rates. The cost of borrowing impacts all areas, including investing, purchasing, and savings. Just the anticipation of what may happen is enough to cause a stock market reaction. However, higher rates seem less frightening to investors these days, as they anticipate the future path of interest rates may be peaking. Another expert noted, "I think the markets are less anxious about interest rate hikes now than in Q3 and in Q4 of 2022. With the better than expected recent inflation numbers, the Fed and investors feel like they have some control over inflation. It seems now everyone sees a path to an eventual holding off the rate hikes." While major stock indexes such as the S&P 500 spent most of 2022 in a dump, they have performed well in 2023, and the S&P 500 has risen about 16%, while the Nasdaq Composite has climbed around 31%. But there is still a highly expected recession. So what do we do about that? Well, the market's recent relative strength suggests that investors may be more optimistic about a turnaround than they were in 2022. Whether a recession happens and its potential severity are major uncertainties now, but they remain unavoidable concerns. So after a strong run-up in 2023, there may yet be plenty of room for markets to fall further if the economy worsens significantly. Moreover, another report stated that the Federal Reserve's decision to either raise or pause rates may not significantly impact the crypto market, according to the industry watchers. Nonetheless, the insights from the US Central Bank about its overall view of the economy might. The Fed is likely to keep the rate steady as it tries to maintain the balance between possible recession and high inflation, said Rushian Linka, chief of markets at Web3 platform uHodler. It was also noted that the Fed could simply be pausing to catch its breath or reach a point where further rate hikes are off the table. Moving forward, at the beginning of the year, it was impossible to say exactly what will happen to the cryptocurrency market in 2023 and beyond. And there's still more questions than answers, and many investors were definitely scared. By keeping an eye on a few overarching themes of crypto, a few crucial details were highlighted. Regulation in the US and abroad, mass market adoption of cryptocurrency payments, exchange-traded funds based on Bitcoin and other digital currencies, and countries adopting Bitcoin as legal tender were some of the highlighted predictions. As more issues developed and are resolved, the long-term future of the cryptocurrency sector will begin to take shape. And it's also possible that a series of baby steps, which started with Bitcoin's creation in 2009, are likely to continue for many years. After rising interest rates crushed the cryptocurrency market in 2022, this year has been a completely different story. The entire market for digital assets is currently valued at $1 trillion, up from roughly $800 billion at the start of the year. Now that the bull market is on the horizon, investors might be considering the volatile asset class as fertile hunting ground for opportunities. Due to the tens of thousands of cryptocurrencies out there, it seems like a daunting task to try and pick one, but Bitcoin always remains an option, and it's the right time to buy Bitcoin. One of the reasons that validates this assertion is the upcoming halving that is slated to take place in April of 2024. The ingredients are already there for Bitcoin to go up. And once again, historically speaking, the several months leading up to a halving have typically been a fantastic time to buy Bitcoin, making it a top crypto to add to your portfolios in this month. In fact, after the spring of next year, Bitcoin's supply growth will be lower than gold's, an extremely positive development. Speaking of demand, Bitcoin's price could get a major boost if the Securities and Exchange Commission approves the numerous applications to launch spot Bitcoin exchange-traded funds, which could part the curtains to greater levels of institutional capital flowing into the top digital asset. This development could drive Bitcoin higher to new levels. Beside the near-term catalyst and both the impending halving and the potential for spot Bitcoin ETF to hit the market, there are many other reasons Bitcoin is the best cryptocurrency to own. It's a good idea to zoom out and focus on these attractive characteristics. You can't afford to be ignorant. Your readiness for a bull run is reflected by your choice of cryptocurrencies in your portfolio. Most investors who follow Bitcoin and crypto know that there will only ever be 21 million coins in existence. This hard cap possibly makes Bitcoin the best store of value asset ever invented. Well, naysayers will quickly point to Bitcoin's high volatility as a potent reason that it is not a good store of value. But consider one thing. In the last decade, its value has skyrocketed roughly 20,000%, trouncing the 45% gain of gold during that time. Regardless of the roller coaster ride, investors who own Bitcoin have seen their purchasing power grow much faster than pretty much any other asset. The time to make the right choice is now. Don't be under pressure, just do it right. But that's going to do it for today's video. Make sure you click on the subscribe and notification buttons, and we'll see you in the next video.